Welcome. These sessions will be recorded. We are pleased you can join us for the Business Education Resilience webinars with 1917 LLC. My name is Pauline Markward, Executive Director of the Greater Bowie Chamber of Commerce, which is made up of members with common interests and concerns related to the business environment in the Bowie area. It is the primary professional trade organization in the Greater Bowie area dedicated to protection, enhancement, and success of the Bowie businesses in our community. The Bowie COVID-19 Business Recovery Assistance Program delivers online technical assistance to help Bowie businesses accelerate their post-pandemic economic recovery. This program is a collaboration between the Greater Bowie Chamber of Commerce and the Bowie Business Innovation Center Business Accelerator and funded by the City of Bowie. During this webinar, it is best to be comfortable with your video on. Remember to mute yourself. Please ask questions through the chat unless otherwise directed. Welcome, William Eric Lindsay, Senior Business Counselor of 1917 LLC.
Good evening, everyone. Thank you, Pauline, for that introduction and overview of the program. So before we introduce our really great speaker, Roderick Johnson from the SBA, I'd like to just share with you just a few things about this program that we're all in. So as Pauline mentioned, this is a business education and resiliency webinar series. And as if you've been here before, you've seen this presentation. However, what we do is we definitely talk about business education, business growth, especially in this pandemic era. But before I move forward, I want to my gratitude and share my gratitude to the Greater Bowie Chamber of Commerce, to Pauline and Terry who are here. I just want to say thank you both for accepting me and my team to do this for the long haul. And so far so good. It's been fun. We have a lot of people on these webinars, and it's been great. The interaction between the presenters and the attendees have been excellent. So I just definitely want to thank you for trusting me and my team in putting this together for you. So a little bit about the webinar series. This is a 2-section, 12-part webinar series. So the first part that we're in right now is the first section. And then it's a total of 24 webinars. It's actually 25. We're in session 6. And in session 6 tonight, we're going to be talking about the PPP and the EIDL, some of the latest things that we're going to hear about that. We obviously took a programmatic approach. One webinar builds upon the other. So from the very first webinar back in January, we talked about goal setting, and then we moved into business planning, then we moved into financial literacy, and then we moved into a little bit of accounting in terms from CFO services. Now tonight, we're going to get into some federal programs, some SBA. We're going to get into some PPP and EIDL information. So all these things, we talked about the financial literacy, we talked about your business planning. It's leading up to this because you need those things to really get through the PPP and EIDL process, which Rod is definitely going to even go take a deeper dive into that process. So the grand finale is July 15th. July 15th is where we just want your business, you and your business as business owners to pitch your business. It's a pitch your business competition. So really it's about your ask. How do you go through your ask? What is your ask, and how you establish your ask in front of a small panel of folks who will give you a grade, who will vote on you, and we will definitely select the first place winner who will receive a wonderful prize. So my pitch for you tonight, if you don't mind, my ask is just come back, sign up for all the webinars, return for all the webinars, because the most important part about this is it's one webinar builds upon the other. So it's okay if you miss one, but come back and build upon the next one, because these are being recorded. They're going to go in the Greater Bowie Chamber of Commerce YouTube page, and you can always come back and take a look at it and still contact each of us and ask direct questions to all the presenters. So with that, I am going to introduce Mr. Rod Johnson. I've known Rod for quite some time. If you haven't heard of Rod, now you hear of him. He's the gentleman that works for the SBA. He's the gentleman that a lot of us in the DC system, in the Maryland DC counseling system, we contact Rod on everything PPP and EIDL. He's been on talk shows, he's been on local news, he's been on regional news, he's been on podcasts, you name it, from between here, Delaware, Maryland, DC, Virginia, Pennsylvania, probably as far west as West Virginia. He's definitely busy in the region helping a lot of business owners with this particular project. So we're going to have a lot of information from Rod tonight. Don't be afraid to ask questions. Rod loves questions, so don't be afraid to ask questions. So with that, I turn over to Rod Johnson.
All right. Thank you, Eric. And thank you, Pauline. Good evening, Greater Bowie Chamber of Commerce. I hope everyone is doing well this evening. I am actually very excited because there is plenty of money available from the federal government to both sustain and grow your business during this COVID-19 pandemic, okay? So I'm gonna say from the onset, if you have not applied for federal government money, get off the sidelines, and now is the time to apply, okay? Because we have deadlines of March 31st, right, 2021 for PPP. We have September 30, 2021 for the 504, 7A and 504 program, which I'll go into more. And then we have December 31st for the EIDL loan and grant program. But the biggest thing is, I need you guys to apply for the PPP program, okay? That'll end March 31st. And if you recall, there was $284 billion that Congress has appropriated to help you business owners sustain your business. So let's go to the next slide and let's see what we're going to talk about this evening. So where are we? We're going to talk about where we are right now as of today with PPP. Then we're going to talk about the funding options, the programs themselves. Now there's a more targeted approach for the EIDL advance. Some of you may remember the EIDL advance that came out around April 2nd of 2020. But now there's going to be a more targeted advance for the EIDL. And then there is the shuttered venue opportunity grant that's available for places like the Kennedy Center, the Improv, the One Step Down, Blues Alley, you know, those kind of places, right? And then we're going to talk about additional assistance and resources. So let's go ahead and dig in. So next slide, and we're going to talk about where we are. All right. So as I said, Congress appropriated $284 billion. We are 3 weeks into the program. There is $200 billion left. After 3 weeks, we've already gone through $84 billion. Okay. Now, if you recall with PPP1, in about a span of a month, right, we went through all the PPP funding and then we had to get another round. Okay, now $525 billion was actually put on the street across America from the PPP funds. It closed down on April 8th. What we found out was that 87% of the loans of that 525,000, what am I talking about? Billion, $525 billion, okay, were $150,000 and below, okay? So you guys kept hearing about all these places like Shake Shack and Ruth Chris and some of these other big places getting all this PPP money, right, for $10 million, $5 million. Well, as I said before, 87% of the money was really $150,000 and below, all right? So now with PPP 2.0, there's even a more targeted approach. So let's go to the next slide, please. All right, so under the Economic Aid Funding Act that the former president signed on December 27th at 5:30 p.m., okay? He signed into law the Economic Aid Funding Act. So we had PPP, we had the extension of the debt relief, right? Loan programs. Then we had the grant programs, which is the EIDL, right? So you still have the EIDL, you have the targeted EIDL advance, and then you had the shuttered venue operators grant. All right, next slide, please. Loan program, grant program. All right, so what's the takeaway? So they expanded the PPP eligibility and how the funds could be used. So there are 4 new expense categories. I better talk about them now. All right, so if you recall, let's do a quick review. PPP, when it started, and this is nowhere in the slides, okay? So this is the Rod editorial. So when the PPP first came out, you had to use 75% of the money towards payroll, 25% for expenses. Let's talk about what those expenses are, because here's what I'm still getting in my emails and telephone calls. You cannot, okay, be buying equipment. You can't be buying a 35-foot boat. Don't laugh, because these things are happening, okay? You can't buy the Maserati, okay? Here are the expenses: gas, water, electric, business cell phone, business landline, okay? Transportation costs. Now there are 4 more expanded expenses, okay? So if you do not have QuickBooks, now you can use this PP money to buy QuickBooks software, to buy CRM software, to buy inventory software so that you can manage your inventory. All right, so what about now you've brought your employees back when you want them to be tested? Well, now you can use PPP money for COVID-19 testing, face masks, the shield guard, okay? You can also use the money, let's just say you happen to be in an area where there was a disturbance and your insurance company didn't cover all the costs. So now you can use PPP money to, restore your business to where it was before the disturbance. And then if you need to restock your shelves, if you have inventory, you can use PP money for that, okay? But not equipment purchases and all the other things that I just mentioned. So that's how the funds were to be used. Now, if you remember on June 5th, the former president signed into law the PPP Flexibility Act. 60% of the money could be used for payroll, 40% for the expenses I just talked about, okay? That's it. We got to color within the line, folks. We got to color within the lines. So don't go outside of that, okay? Because I don't want to read about you in the Washington Post, Washington Business Journal, or Wall Street Journal, okay? So stay within the lines. All right. Now a borrower can select a covered period between 8 and 24 weeks. You get to select. If you remember, we'll go back. When it first came out, you had to use the money within 8 weeks. The Flexibility Act on June 5th, 2020 said, oh, you got a 24-week period. Okay, now you get to choose with this legislation, okay? Now, you have a second draw loan option for the hardest hit small businesses. You have a first draw, and this is the only time that procrastination is okay. Because now, under this program, you have the first draw because you didn't apply the first time. You procrastinated, you waited. Usually procrastination doesn't count. Here it does, all right? Because you procrastinated, you can get a loan up to $10 million. 10 million, not 2, as it is with the PPP 2.0, but $10 million, okay? 500 employees or less. Unlike PPP 2.0, where it says 300 employees or less, first draw, 500 employees or less, up to $10 million, all right? Okay. We already talked about allows for deductions of expenses covered with forgiveness. All right, there's an updated form. Now, if you remember, there were 3 forms, a 3508 short form, 3508 easy form, a 3508 long form. You say, what the heck is the difference? All right, so we'll start with the big one first. The 3508 long form was $2 million up to a $10 million loan. The EZ form was $50,001 up to $2 million, and the 3508S form, short form, was 50,000 and below. So remember, I said we did the analysis. Most loans were 150,000 and above. We have now fixed the short form. As it says here, $150,000 and below is now the 3508 form, okay? It's a 3-page document. Folks, I'm telling you, if it takes you more than 5 minutes to fill this out, there's something wrong. The top page is the actual forgiveness form itself. Page 2 and 3 are just the instructions on how to fill out the top form, okay? It's real simple. Even I can do it. All right, so the EIDL, if you guys remember the EIDL advance, it's not subtracted now for loan forgiveness. So it says here, no longer subtracts EIDL advance from PPP loan forgiveness amount. If you remember when, let's say you got your EIDL advance first, it was $10,000. You applied for a PPP loan, you got $100,000. Well, you had to subtract the EIDL loan, or excuse me, the EIDL advance from the PPP loan. So your actual PPP loan was actually $90,000. When you went for forgiveness, you went for forgiveness for $90,000. Well, now you don't have to worry about the EIDL advance being subtracted, right, from the PPP loan for forgiveness. That was a part of this new legislation. The new legislation was 5,600 pages long. If you want to really narrow in or zone in on all the particulars for the new Economic Aid Act, it's section 300. I know because I had to read it. So it's in section 300 of the bill, okay? Next slide, please. All right, so what is a first draw? Now, let me say this. I've also gotten phone calls, Eric, I may have mentioned this on some of my other presentations, but I'm still getting these phone calls from professional gamblers, okay, who filed 1040s with the Schedule C, right? They're hanging out at National Harbor. They're going to Horseshoe. They're going to Maryland Live. They're going to Delaware Park. Guess what? They're telling me they have been negatively impacted by PPP. Yes, they have, because all the casinos haven't been open, you know, during the whole pandemic. Some have opened, okay? What is the MGM Grand at National Harbor is now open, okay? But they are not eligible. So for you guys that, you know, are professional gamblers, you are not eligible. So now let's go to the first draw. I had to bring that up because that came up at 3 o'clock this afternoon on another presentation I did. All right. So I've already talked about the expanded eligible expenses. We talked about the 8 or 24 weeks. Now, you can also increase the original PPP loan amount. You must have been in business by February 15th, just like the first round, right? PPP 1.0, but you must apply by March 31st. And remember, there was 284 billion appropriated. We're down to 200 billion, okay? So apply, don't sit on the sidelines and wait. As you look up, it'll be gone. All right, next slide, please. All right, so who's also eligible? Housing cooperatives, destination marketing organizations, Chamber of Commerce like Bowie, and news organizations. And of course, the sole proprietors, independent contractors, and the single member LLCs, partnerships, corporations, churches. I get calls from churches still. Are we eligible? Yes, you are. Veteran organizations, yes, you are. And tribal businesses, you are still eligible. Next slide, please. So the second draw, here you are. Second draw, you must have used all of PPP 1.0. You say, well, I'm having a hard time using all my PPP 1.0. Well, I gave you the expanded 4 expense categories, okay? So here's the nuance. If you have already applied for PPP forgiveness for 1.0, you can't go back and grab those other 4 expense categories that I talked about with the PPE, the software, restoring your property back to its original form. However, if you haven't applied for PPP and you're still having a hard time, you spent the money already, you can go back and capture those expenses, and you can bonus the money. So you have these hardworking, loyal employees that you've had come back to work. Give them a hazardous bonus or hazardous pay, okay? Don't discriminate. This is what I mean. So you can't give one employee $250 and another one $1,000. So if it's $250, give them all $250, or give them all $500, or give them all $1,000, okay? And oh, by the way, owner, you cannot be bonusing the money to yourself, okay? So I've given you now 2 ways in which you can use all of your PPP 1.0, because you have to use it in order to be eligible for the second draw. All right, so as you see here, and I mentioned before, the maximum loan amount for the second draw is $2 million. Now, the way that you're going to maximize the loan amount is you get the opportunity to choose whether you're going to use 2019 or your 2020 payroll cost, okay? Whichever one is higher, that's the one you're going to use. So it's going to be 2.5 times, right, your average payroll cost times 2.5. So I just gave you the secret to determining what your loan amount is going to be. It's real easy. Now, if you are a single member LLC, a sole proprietor, or what's my other one, the 1099 contractor, you're going to go to line 31 on the Schedule C where it says net profit. Folks, the only way this works is if you have a net profit. So you're going to take your net profit divided by 12 times 2.5. That's your loan amount, okay? It's easy. It's a 2-second calculation. You'll know what your loan amount is going to be. Now, if you are a restaurant or a hotel, hotel, motel, holiday inn, as they say, then you get to do 3.5 times the average monthly 2019 or 2020 payroll costs up to $2 million. All right. Now, your NAICS code has to begin with a 72. So, and business owners ask me, well, where do I find my NAICS code? All right. So if you're 1120S, 1120, a 1065, a Schedule C, you're going to go to the top left-hand corner, second box down. The NAICS code is there. You can't miss it, right? You have to have it there when you file your taxes, okay? It has to be there. So hopefully you guys know your NAICS code. You should, because you're in business. So if it begins with a 72, 3.5 times the average monthly 2019 or 2020. Now, I'm going to give you a secret. SBA.gov/PPP. Any and everything you want to know is there. SBA.gov/PPP. I say that because that's where the 2483 second draw, the 2483 first draw, the 5,600 page, legislation, all of that is there. SBA.gov/PPP. Okay, next slide, please.
And we have 2 questions, Rod.
Uh-oh, all right. Hopefully I can answer it.
Right off the bat, I love it. The first question is there any targeted money for small Black businesses hit hardest by the pandemic? That's the
And
first
yes,
question.
we're going to be coming to that later in the presentation.
Yep.
So remember, I think it was around slide 3, I said there was the loans on one side, and on the right side, there were grants.
Right.
And it is targeted for women and minority-owned companies. All right, so we're going to take a pause right there since someone asked me that question. All right, so if you remember, January 11th through January 18th, the portals of CDFIs, Certified Development Financial Institutions, and community banks was 1 billion and below in assets, okay? Their portals were open specifically for women and other minority companies to get first dibs of this PPP 2.0, okay? So that segment of the population had first dibs. January 19th, all the other banks opened their portals for the rest of, right, the population. Now, there's going to be the EIDL grant that you're going to see that's targeted to low and moderate income areas where your business may be located. And then there's going to be, the shuttered venue grant, if the shuttered venue is in a low and moderate income area, okay? So the money is more targeted this round than it was the first round for women and minority organizations. I do not want to hear this round that minorities did not get the opportunity to really take advantage of PPP because your congressman heard you and actually you had first dibs at the money, okay? So we need you to apply. I strongly urge you to apply. And toward the end, I'm gonna, talk about how you can cobble all this money together. All right, so second draw eligibility. You must have previously received a first draw, okay, and I talked about that. And covered periods cannot overlap. That's right, covered periods cannot overlap. All right, you can have no more than 300 employees, which I talked about. Here's the key. I'm sure most of you can show that you had a 25% reduction in your gross sales between comparable quarters in 2019 and 2020. So what does that mean? You can compare March 31st, 2019 to March 31st, 2020. June 30, 2019 to June 30, 2020, September 30, 2019 to September 30, 2020, or December 31st, 2019 to December 31st, 2020. You choose. Either way, it's got to show a 25% reduction. I think most of you have seen a 25% reduction in your gross receipts. Here's the little fine print in the act, in that 5,600-page act. If you do QuickBooks statements, if you do compiled or reviewed financial statements prepared by your CPA, as the 51% or greater owner, you must sign and date that income statement or profit and loss statement, whichever you want to call it. You have to sign and date it, okay, attesting to the veracity of the numbers that you are supplying the bank. Now, if you don't sign it, the bank's going to kick it back to you. So I'm giving you the heads up. Go ahead and sign it before that income statement of profit and loss, whichever you want to call it. Go ahead and sign it and hand it over to the bank, okay? Next slide, please. See how easy this is? All right, so the application process. Find yourself a lender. I've given you the URLs on the left-hand side. If you don't have a lender, shame on you, because every small business needs to have a relationship with the bank. Eric, that's another seminar, okay? But
yes,
every business owner should have a banking relationship. If you don't, SBA.gov/lender match. Okay. You have resource partners, but I'll save that to the end. All right. So you complete the application. I've already given you, right, the document number, 2483. Go out to SBA.gov/PPP and you can get the application. The banks should also have it on their portal, but if they don't, you know where to go. I just gave it to you. One-page document. It's easy to complete. Even I can do it. All right, then the SBA issues the loan. That's it. Next slide, please. All right, so let's have a review. PPP terms and maturity. The fixed rate is at 1%. You know, folks, that's unheard of. In my, many decades of living and doing commercial lending, there's never been a fixed interest rate for a commercial loan at 1%. Non-compounding, non-adjustable. Never had a commercial loan where you got no collateral or no personal guarantees, okay? I'm trembling over here because of this loosey-goosey underwriting. No fees or prepayment penalties, okay? Really? On a commercial loan? All right. Now, let's do a little backtrack. Before June 5th, right, 2020, if you didn't get the whole loan forgiven and it became a loan, you had 2 years to pay it back. After June 5th, you got 5 years to pay it back because of the PPP Flexibility Act, okay? Payments start once borrower knows how much of the PPP loan will be forgiven. I'm going to be optimistic and say 100% of your loan is going to be forgiven, okay? So you don't have to worry about a loan. If you do not apply for forgiveness, which I don't understand why you wouldn't apply for forgiveness, but if you don't apply for forgiveness, your payments will start 10 months after the last date of the covered period, okay? But hopefully this last bullet won't apply because all of you are going to apply for forgiveness. All right, next slide, please. All right, so you must apply for the forgiveness through your lender. The lender has 60 days to determine if they think that your loan is forgivable. Then the lender will send it to the SBA. We, the SBA, have 90 days to determine if, in fact, your loan is forgivable. Then we will notify your lender, and then your lender will notify you. Please do not call me and ask me where you are in the process. It's a 5-month process, okay? So don't call me and ask me where you are because I won't know, okay? And your lender won't know either, so don't call and bug your lender. It's a 5-month process. So I'm gonna go off the ranch again. So I'm gonna give you what it looks like from an accounting standpoint. Right now on your balance sheet, this PPP loan should show up on the liability side of your balance sheet as a short-term bank loan payable PPP. For those of you that use QuickBooks, you can go ahead and use that nomenclature, okay? All right, I'm gonna be optimistic. It's 100% forgivable. So now we're gonna move from the balance sheet over to the income statement. It is not going to show up in your top line revenue because you did not earn this money from your normal course of business. It's going to show as extraordinary income, okay? Which is below your operating profit line. Eric can help you with that if you guys are not familiar, but it'll be, again, an extraordinary item on your income statement, okay? Here's what's important. Oh, I'm ahead of myself here, but I'm gonna say it anyway. It is a non-taxable event. I'll say it again because I keep getting questions about it. It is a non-taxable event, okay? All right, so here we go. Updates for the Economic Aid Act. Idle advances are no longer deducted from PPP for loan forgiveness. We talked about that. See, I just said it. Expenses paid with PPP loan funds are federally tax deductible. You don't need to consult with the IRS. I already told you. You heard it right here, all right? You have forgivable, expanded forgivable expenses, which we talked about already. And we already talked about the new simplified forgiveness application. And it says here, right, forgiven PPP loans are not federally taxable income. So we've covered all that. You see it here, you have this slide, okay, that shows you that it is a non-taxable event to you. Next slide, please. So you can email me about other stuff, but you're not going to email me and ask me any more about if this is a taxable event for my company. All right. So what is this extended to December 31st? We must be talking about EIDL. Okay. So the use of proceeds, healthcare benefits, rent, utilities, fixed debt payments. Now here's the difference between EIDL and PPP. With PPP, you can't pay accounts payables or quote your vendors. With EIDL, you know it's capped at 150,000. You can pay your vendors using EIDL. The good thing about EIDL, although it only goes up to $150,000, is that you're not putting the restriction of 60-40, 60 payroll, 40 expenses, okay? So however you want to use EIDL within what you see here, it's legal, all right? Young woman called me today and said that she was buying a backhoe for her construction company. I said, really? No, you're not. That's not on the expenses that you can use EIDL for. So you're going to have to put that backhoe on the back burner, okay, is what I told her. So remember, color within the line, folks. Use the money for the intended purposes of the particular program. All right. The interest rate, 3.75% for businesses, 2.75% for nonprofits. It's a 30-year loan. Not in my lifetime have I seen a 30-year loan for commercial money. It's a 30-year loan, no prepayment penalty, loans over $25,000, right? It's secured by a UCC1. Eric can tell you what the CC1 is, UCC1 is later, okay? I call it a blanket lien in layman's terms. Eligibility, qualified business, cooperatives, agricultural. So you farmers, you can go on out there, okay? Now, somebody's gonna ask me, well, what about CBD? Better known as marijuana, without the THC, okay? Well, you know, that is still a federal crime, folks, okay? So right now, the SBA and Congress is trying to work through that because states are now beginning to legalize, you know, CBD and these farms and all that stuff. But right now, if you're a CBD grower in the state of Maryland and you're banking at Susquehanna Bank, because that's the only bank in Maryland that's actually, you know, accepting deposits for CBD without the THC, right now, no dice. But if you grow corn and all that other stuff, go get the money. 500 or fewer employees, all right? Next slide, please. All right, so here we talk about the targeted approach for the EIDL advance. All right, let me look through this a minute, because even all right, so it talks about it's targeted in the low income community, which it is. You got to suffer, unlike PPP, a 30% or greater economic loss. Now, we already talked about how you prove that. It's through using your income statement. And you have to have 300 or fewer employees, right? Those who apply for the EIDL advance but didn't receive funds due to a lack of funding will receive a full $10,000 if they meet the same requirements above and per targeted EIDL advance fund availability. Well, let me tell you, there was $20 billion appropriated for the targeted EIDL advance, $20 billion, okay? All right, so you don't reach out, the SBA will reach out to those who may qualify. So I wanted to dispel that myth that you'll be reaching out to the SBA. No, the SBA will be reaching out to you via email, okay? So just be patient. Next slide, please. All right, so to get this targeted advance, now here's what hurts me to my heart. We still got small businesses out there that haven't filed their 2019 federal tax return. What's going on with you guys? We're into a new tax season, okay? We are into a new tax season and you guys have not filed your 2019 federal tax returns? Come on, guys. How are you going to take advantage of some of this targeted money if you don't have your federal tax returns for 2019 filed? So let's get it done. In fact, let's get 2019 and 2020 done while we're at it, okay? All right, so your EIN as specified in the original EIDL application, they need to match, okay? We're having an issue with that. You guys are coming up with a different EIN number than the one you put on your original application. Folks, let's make sure they match so it doesn't get kicked back, okay? Because if it gets kicked back, and you're going to the back of the line, who knows when you'll get the EIDL advance. So let's not let that be an issue, all right? Applicants to pass the eligibility will have to sign a 4506T. So here's why filing is important, because they're going to ask for the 2020, 2019, 2018. So go get this stuff filed, get it done, okay? All right, next slide, please. Application process, only one submission for each targeted EIDL advance can be made. As we just talked about, please carefully review the bank account information. Here's the other thing. Rod Johnson and Associates and Rod Johnson. Now, it's Rod Johnson and Associates that's getting the EIDL advance money. So why am I putting Rod Johnson's ABA number and bank account number on the application when it should be Rod Johnson and Associates? Okay. Well, too many of you are putting your personal bank account numbers on the application. It slows down, it stops the process. It doesn't slow it down, it stops the process. You're going to go to the back of the line. So let's make sure you're putting the right bank account information down on that application. Here's the third bullet, and I can't say it enough. Ensure information submitted is 100% correct. Why? Due to the limited targeted EIDL advance funds. Now, $20 billion sounds like a lot of money, but it's not, because it'll go fast. Okay? So let's make sure we fill out the application right the first time. The SBA has 21 days to get the money in your hands. Okay? If you have questions, don't call me. Here's the email address right here, targetedadvance@sba.gov. I'm sure these slides will be up on the Greater Bowie Chamber website. Okay, good. Of course, if you receive an email, an ACH deposit will be made to your account. So again, providing the right account information is important. Okay, I want you to get the money. I don't want you to go to the back of the line. Next slide, please. The shuttered venue operators grant. We already talked about Blues Alley and the Improv and the 930 Club and all these other, the Atlas, the Kennedy Center, all these places, okay? Who's eligible? Live venue operators or promoters. Did I say promoters? Remember, promoters. Theatrical producers, performing arts organizations, motion picture theater like AMC, museum operators, the zoo. When's the last time you've been to the National Zoo pre-COVID-19? The zoo, the aquariums in the Inner Harbor, okay? Talent representatives. I hear Pauline is a talent representative. So she will qualify. Up to 5 business entities owned by an eligible entity that also meets the criteria. You got to be in business as of February 29th. And you cannot have received a PPP loan past December 27th. All right, next slide, please. Go ahead to the next slide, because I don't want people to get confused. All right, now, here's what I love right here. Some of you all are growing during this pandemic. So I want you to go get the money. 504-7A, microloan borrowers only. So I'm gonna talk about the fun stuff. You can apply at your bank and there are absolutely no SBA fees to you, the borrower. No fees for any of these loan programs, none. Guess what's even better? The banks don't even have to pay the SBA an annual fee to make the loan to you. So there are no fees for anybody. So the banks have incentive to make these loans to you. Now, here's what's even better that the SBA is doing. So the Signature 7A program that goes up to $5 million. The SBA, instead of offering a 75% guarantee, is now a 90% guarantee. 90% guarantee. The SBA Express that had a maximum of $350,000 now goes up to $1 million. The banks will get a 50% guarantee. Now it's a 75% guarantee. So for you companies that need that $1 million line of credit, okay, the SBA is offering the bank a $750,000 guarantee. The bank's exposure is only $250,000, which they're not to like. For you guys that are buying equipment and going out and doing a construction loan, because now you're building your Taj Mahal for your business and you want to use the 504 program, no fees, none. For the guy that wants that $50,000 microloan, no fees, none. All right, guess what? Here's what's even better. The SBA is going to pay the first 6 months of principal and interest on all 3 loans. 6 months of principal and interest on these new loans for you. What is there not to like about that? Okay. If you have a current 504, 7A microloan with your bank, now you should automatically be enrolled in this program. So I want you to call your bank tomorrow and find out, am I automatically enrolled? But the SBA is going to pay your principal and interest for 3 months on your existing 504, 7A or microloan. Oh my gosh. Okay, so we're going to do a quick review. PPP first draw, then you got PPP second draw. You have an EIDL, which you can ask for an increase. You have a targeted EIDL advance grant. You now have a 7A 504 microloan that you're not paying an SBA fee. For the first 6 months of that new loan, you're not paying principal and interest. Then you have an already existing 504 7A or microloan, and you're not paying principal and interest for 3 months on that loan. People, go get the money. I can't make it any clearer. Let's go to the next slide, please. Now you see why I'm excited.
Yeah, we have a lot of, just giving you a heads up, we have a lot of questions, but I have a feeling that you'll be answering some of these questions as you go. So to the attendees, I'm gonna let Rod continue because I have a feeling he's gonna answer your questions, but I'll definitely go back and read off each question.
All right, so what I talk about with this Economic Aid Act, you got the loan program side. So PPP, you're gonna go to your bank, right? For the 7A 504 microloans, you're gonna go to your bank and apply. Now, I've already given you the formula so that you know what your actual loan amount is gonna be based on your Schedule C, line 31, or your average payroll from your 941 that you file on a quarterly basis. It's that easy. Okay, so now we're gonna move over to the grant side. So the SBA is gonna contact you, okay? They wanna contact you. SBA.gov, PPP, there's a section there where you put in your company's zip code to see if you're in a low to moderate income area, okay? So that's what you're gonna do. If you're like the Improv, the 930 Club, the Kennedy Center, you know, Warner Theater, one of those places, okay, Blues Alley, then you're gonna be able to get a grant. I think it's up to $250,000 if I remember. For the shuttered venue operators, it's a grant, okay? The EIDL, targeted EIDL is a grant, okay? Just so you know, $40 billion has been set aside for EIDL, for businesses located in low and moderate income areas, okay? So the money is targeted for women and minorities. Go get the money. All right, next slide, please. So I kept giving you SBA.gov, PPP. The other website is SBA.gov/updates. And you're gonna put in your zip code. So obviously if you're in Bowie, you funnel into my office in Washington, DC. The Washington Metropolitan District Office covers Montgomery and Prince George's County, Northern Virginia, and Washington, DC. So you're gonna be a part of my district office, okay, when you put in your zip code. So you'll know all things as soon as they're happening. You're gonna get an email with the latest update, Okay. All right. So actually, that's it. That is really it. So I'm ready to take on your questions. Look, you have all this money, federal money out there to help you sustain and grow your business. You got to love it. All right. So let's go to the questions. Let's have some fun. Let's open up the lines, as they say on the radio.
That's the truth. I'm going to answer this particular question. Someone wanted to know the email. I think it was targeted at SBA, targeted advanced at SBA.gov. Someone was asking to take a look at that email to make sure that they got it down right. So there it is. So the next question is, are partnership entities without employees, but they have 1099 independent contractors, are they eligible to apply for first round PPP?
Well, the 1099 contractors are not your employees. So a 1099 contractor, right? You're going to have your 1099 form. Here's the formula. Take that number divided by 12 times 2.5. Short answer is yes, you're eligible, but I also gave you the formula.
Yep. The next question, and I'm going to add a little bit to this question. Will Prince George's County area qualify for that type of grant? And I think the person was talking about
the SBOG?
Yeah, I think it was the Shutter grant. But I also want to add to that question. Hub zones and opportunity zones, particularly hub zones, do they have a specialty area or a specialty designation under that grant?
Well, I mean, if you're in a hub zone, right, then you're already, you're in the right zone.
Yep.
You're already in the right zone, so you don't have to worry about that.
Yep. So that's something else for people to look into as well. If your area is in a hub zone, you definitely want to add that to your application, because that helps with the application because you're in that area.
You're already in the zone.
Yep. And let's see. Do you have to have a designation to get that set aside money? In designation, they talk about 8A, for example, but the person is African-American male owner, business owner.
All you have to do is have your business located in a low to moderate income area. Mm-hmm. The race and ethnicity doesn't matter.
Right. Next question is, this one is interesting. Define fixed debt payments.
I think that was under EIDL.
Yes.
So actually, you can use that money to pay down principal and interest on another loan. Mm-hmm. That's a fixed debt payment.
Yep. So the fixed debt payment is actually, it's considered good debt, like a house mortgage or a student loan. That's good debt, not credit card debt, put it that way. It's fixed debt. Next question is, can you explain again how to apply for the additional advance via EIDL? Is it based on number of employees or has the criteria changed?
Remember, they're going to be calling you for the advance. Okay. Just remember that. You don't call them, they call you. But you do have to have under 500 employees. Yes. That's the rule.
Can we have Rod's contact information? Yes.
Oh, it's not in the chat?
We'll definitely put it in there.
But all right. So it's the telephone number is 202-617-4435. And the email is roderick.johnson@sba.gov. Now, I'll tell you now, I'm usually better with the emails, and the emails are better because sometimes the questions that you have, then I have what I call a procedure or notice that's been put out by the SBA. So I can give you the actual notice, or as we say, the law to the question that you have, so that you can have it right in front of you when you're making the application, either for the grant or the loan or for forgiveness.
So is Rod going back to the chart? Now, could you type in which chart you think we're talking about? There's a couple, not this chart, right? That's not the one that we covered. Is there
Yeah,
another?
he skipped that chart, that green
Okay,
chart.
go ahead to that green
Okay.
chart.
All right, there we go.
Because see, yeah, that green chart. Okay, so when I usually go over this green chart, people usually get confused. But really what you need to do is look at the columns, not the rows. Pay attention to the columns, okay? And then hopefully that helps.
And again, this is recorded, and the slides will be available as well for future reference. Just want to add that piece. Let's see. Is there a credit score requirement for the 7A microloan?
Oh, yes. All right. So the SBA, what is the minimum FICO? 650. It's 650. For EIDL, okay, for the EIDL loan, it's 570.
We have a little bit of a technical question, I think. The targeted EIDL advance, would Prince George's County be in that area, or is it areas within the county? So I'm thinking if they're asking if it's the entire county, or
It's
is
not,
it parts of the county?
No, it's not the entire county. There are areas within the county that are targeted.
Right.
No, it's not the entire area.
Right. And I think it's also with hub zones, because hub zones isn't an entire county. It's actually a calculation based on certain criteria. So hub zones are the same thing. So it's the exact same. It's a similar calculation within the targeted areas within the area, within a county or a jurisdiction. The other question was, if you have received an EIDL loan, can it be forgiven without qualifying for the EIDL targeted advance?
Denied. No EIDL loan is forgiven, right?
Yeah.
So forget about forgiving when we're talking about the EIDL loan. The EIDL advance, I don't even know why they call it an advance, because it really is a grant. It's a grant.
So we have a follow-up point of clarification regarding the partnership entity without employees. Is the eligibility to apply for first round PPP? I know the respective 1099 independent contractors are.
So what's the question then?
Yeah, it's a follow-up point of, is the partnership entity without employees eligibility to apply for first round PPP? I know the respective 1099 independent contractors are. I'm not really sure what the question, could you retype the question, or maybe retype the question in the chat area?
So the 1099s, as we said before, they're eligible on their own.
Right.
If you're a partnership, and maybe the question is, they're a partnership and there are two of them, they haven't applied because they procrastinated, right? Remember I said this is a good time where it's good to be a procrastinator, because if you apply now, you can get up to a $10 million loan, okay? Versus the second PPP, it's only up to 2 million. So yes, as a partnership, you can apply for PPP 1.0, and you can get up to 10 million. You have to use all that money, and then you can apply for PPP 2.0, okay? And that's only up to $2 million. Oh, by the way, since I just mentioned that, so if you have a PPP loan of $2 million or greater, you're going to automatically get audited. Okay, I forgot to mention that, sorry.
Right.
Yes, you'll automatically get audited. Now, we don't know if that audit will take 90 days or 6 months, just know you're going to get audited. And oh, by the way, whether it's EIDL or PPP, you should keep that documentation for 4 years. Because the SBA reserves the right to come in and audit you at any time.
I think we had someone with their hand up. If they're still here, I don't know, Pauline, could we unmute them to ask that question? I don't know.
Is this Lara? Is it Lara?
No, I think is it Deuce? Because my screen, I can only see limited people.
Oh, okay, Deuce Stealing.
I think it's Deuce. Can you unmute, I think, and just go ahead and ask your question?
Deuce, the former Philadelphia Eagle.
Hey, can you guys hear me?
Oh yeah.
Yes.
Okay.
Yes.
Yeah, so Roger, I didn't want to take too much time because I know that now I have your email. So I'm just gonna email you tomorrow because my personal situation is pretty lengthy, and I'm going to go into a little backstory about it all, and maybe you can give me some clarity on my situation. And so I'll just reach out. I'll just send you an email tonight, and then you can reach out to me tomorrow, whatever the case. I don't want to take too much time.
Okay.
Okay, thank you. But it's coming from Deuce, and that's why I use his name, because it's very obvious in the email.
Okay.
Okay, thank you.
Cool. Thank you, Deuce. Let's see. We have a few more questions. I'm trying to circle them because some of them we answered. For example, could you provide some examples of those targeted areas? I do think one of the examples was the hub zone areas, correct?
Yes.
Yeah. Would it include a qualified hub zone? Yeah.
Yeah.
Yeah, definitely. Let's see. Is there a place where we can go to get help to build a strong portfolio for our bank when it comes to the 7A loan?
When you say build a strong portfolio,
Yeah.
what does that mean?
I'm assuming that from the question, I gather that when they create their paperwork to get the 7A loan, is there someone that can help them through that process? I would assume that's their bank relationship that you should have that would get you through that.
All right. So your lender, and remember I said, you should have a banking relationship. All right. So, all right, since I sat in that chair for a little over 30 years. So if we have a relationship, my expectation is that you already know what you need. Okay. But just in case you don't, then I'm going to say, and again, if you haven't filed your 2019 business tax returns, let's get it done. Okay. So you're going to bring me your 2018, 2019, and 2020 business tax returns. March 15th is just around the corner. All right. Then you're going to bring me your 2018, 2019, and 2020 personal tax returns. So when you hear me talk about 2020, what's that mean? No extensions. I hated it when people would say, oh, well, I extended my tax returns. Well, you don't get any money if you extend your tax returns. So get them done. Okay. Just being very clear about that. All right. Then, depending on your revenue size, so we're going to break it down like this. So for up to $2 million, I'll accept business tax return. If you're $2 million to $10 million, I'm looking for reviewed quality financial statements. If you're over $10 million, I'm looking for audited financial statements. Okay, that's the rule. Now, since we're in an interim period, anytime throughout the year in the interim period, then I'm looking for those QuickBooks financial statements. So right now in fact, your books should be closed. What's today? February 11th? So as of today, I'll give you till today. Then your books for January should be closed. Your billings or invoices should already be out the door. In fact, your invoices should have been out the door by February 5th. So you can give me your January 31st balance sheet, income statement, accounts receivable, and accounts payable aging, an updated personal financial statement dated January 31st, 2021. That's what I'm going to be looking for, in addition to your 2018, 19, and 2020 business and personal tax return. Okay, that's a full package. And then I want an executive summary of the deal that shows me the sources and uses of the cash. That's a full package. Okay, so that's what I'm looking for. And oh, by the way, if it's a term loan, then I need to see month by month projections. Okay, for 3 years, month by month. And I will scrutinize them. Actually, I still do in the chair I sit in now. And I will still scrutinize your projections to make sure they make sense.
So question on the EIDL. So there's an EIDL loan, which is different from the EIDL grant, which they call the advance. So is there a difference between the EIDL grant and the EIDL loan or the EIDL advance?
No, well, there's a difference between a loan. The loan says it's a loan. The advance and grant are the same thing. That's why I say I don't know why they call it EIDL advance, because it really is a grant.
Right.
So the grant and the advance is the same thing. The loan is a loan. It's a 30-year loan.
Here's a question, interesting question. Where can we find information on how to keep records so we know we are spending the money correctly?
Well, there's not a place per se. You have you already know, right? Even this deck that they're going to give you, it tells you what expenses you can spend the money on. So, and I already gave them to you, right? Gas, water, electric, cell phone, business, not your personal cell phone, people. Okay. Remember, you could get audited. Your business landline, interest on a commercial mortgage, you know, for those office condos out there in Bowie, PPE, software for your accounting, your payroll service, your CRM, okay? Your inventory control. So you have what you can spend the money on. That's your 40%. Now, let's talk about forgiveness for a minute. So if Rod Johnson is an LLC, a 1099, or a sole proprietorship, here's what I do. If I did PPP 1.0 and I did the 75-50 split or 60-40 split, great. PPP 2.0, I'm stuffing the money in my own pocket. I'm going to use 100% of PPP 2.0 and put it in my pocket. So this is what I'm going to do. I'm going to make sure I have that other account that I can write a check off of. In the memo line, I'm going to put payroll Rod. I'm going to take that check. I'm going to put it in my personal checking account. Okay. Now, I have the bank statement that I wrote the check off of. I have my personal bank statement, right, that the check went into. And I have the copy of the canceled check. That's all the documentation that I need to provide for 100% forgiveness. Real easy. Okay. That's what I do. Now, if I didn't do it the first time with PPP 1.0, then that's what I do with PPP 1.0. So I can assure myself of 100% forgiveness. And then I take PPP 2.0 and do what I said with PPP 1.0, and that's use the 60-40 split. Okay. Either way, however you want to do it, I'd make sure that I pay myself 100%. Okay. That's what I would do to ensure that I got 100% forgiveness. There's not going to be any questions asked because the documentation is that simple.
And I think we also covered that question. What are they looking for? They as an SBA or they in the banks, what are they looking for to grant the loan?
The package I just went over.
Mm-hmm. Yeah.
Right.
You just answered it. So,
but we'll do it again because I can't say it enough, particularly for women and minority-owned businesses. 18, 19, and 20, business and personal tax returns, a personal financial statement dated January 31st, 2021. If you do up to $2 million in revenue, I'm okay with business tax returns. If you do 2 million to 10 million, I want review quality financial statements. If you're doing over $10 million in revenue, I want the audited financial statements. Okay. And the accounts receivable aging and accounts payable aging reports. I got to see what your collections are like and if you pay your bills. Also, I'm going to pull a Dun & Bradstreet report, just so you know. I'm going to pull that Dun & Bradstreet. I'm looking for an 80 paydex score. So Rod, what is the scoring criteria for Dun & Bradstreet? It's 0 to 100. The 80 is what I'm looking for. 80 paydex score. Rod, what's the FICO score for an SBA loan? The minimum is 650. Not 600, 650. Okay. Preferably 700 and above, but 650 is the minimum. Okay. Hopefully you didn't default on any prior federal government loans. There are a lot of you out there that didn't repay that student loan for law school. Doctors and lawyers are, yes, I'm calling you guys out. Doctors and lawyers are notorious for not paying back their student loans. So if you didn't repay it, you won't be getting any of these loans, okay? You cannot default on any government debt before.
All right, so I think we answered that question about the 650 credit score. And I think the second part of that question was, and what sort of annual net profit on their profit and loss statement should there be?
You know, there's really not necessarily a number. This is what I say to people. And here's what's famous, Eric. Well, you know, I don't want to pay taxes, so I show a small loss. Wrong, because you're not going to get the loan. Why? Because there's no cash flow. So just keep in mind, let's think about this formula. I'm going to give you the secret, because you know what? When I received the financial statements from borrowers, I did this debt service coverage ratio. So I'm going to give you a peek into what lenders look at. Because I'm going to tell you what, we don't look at anything else until we do the debt service coverage. Here it is, EBITDA, EBITDA. Even Pauline knows this one. Earnings before interest, taxes, depreciation, and amortization, okay? So you're gonna add up all those numbers. Now, that's in your denominator. Numerator. Numerator, okay? I'm getting old here. Numerator. Now, if you have a sub-S corporation or an LLC, remember, and I'm gonna give you an example. So let's just say your company made $40,000, you're a sub-S or you're an LLC, okay? So off the top, you're going to multiply that times 40%, right? For the 40% tax bracket for state and federal taxes, all right? So now your net profit is down to 60,000. You're going to subtract, because you're going to subtract 40,000 from that 100,000. So remember, you got to account for the distributions that you're going to take to pay the taxes, right? Because you're a sub-S on the LLC. So in that EBITDA equation, you got to subtract out the distribution. So that's in your numerator. In your denominator, you're going to have interest expense, okay, on the line of credit or the loan, and current maturities of long-term debt. Many people don't hear about that one. Rod, where in the world do I get the current maturities of long-term debt? All right, so I'm gonna give you an example. You have a $100,000 loan over 5 years. Forget it. Well, you know what? We'll do the interest rate. Let's say 5%. You probably have to help me on this area because I'm old. All right, so we'll do just a principle. We'll just do the hard equation. So we know that we have to pay $20,000 because it's a 5-year loan. So $20,000 is going to be your current maturities of long-term debt. 80,000 is going to be in the long-term portion of your liabilities, okay? So that's where you're going to get your current maturities of long-term debt. So what's 5% of $100,000? What's that, $5,000, Eric? All right, so then That's your interest expense that's going to go in the numerator. So you're going to have $20,000 that goes in your, your denominator. It goes in your denominator, and you're going to have the $5,000 of interest expense that goes in the denominator. Okay. And depending on what type of entity you have, you're going to have taxes in that denominator too. So you take your numerator divided by your denominator, and it should be 1.2 times. So you say, Rod, what the heck does 1.2 times mean? In common language, it's $1.20 for every dollar of debt that you have. That's really what it means. Okay, that's really what it means. So before I read anything about what you're going to tell me about your business, I do this debt service coverage ratio to make sure that it cash flows. If it doesn't cash flow, I don't read anything because I don't have a loan that can be repaid. So now you have the secret. You can do this on your own. So by the time you walk into the bank, you already know whether or not you're going to get this loan because you've done the debt service coverage ratio. And you know it needs to be 1.2 times or better. Okay. Now, don't come to us without any collateral. Don't think we're going to do $1 million loan without collateral. Okay. That's just a non-starter. So I don't care if you have 1.2 times or greater without any collateral, it's not happening. So what's collateral? Accounts receivable, inventory, okay, equipment that's not 100% depreciated, all of the marketable securities in the business name, cash, or a combination of those things are what we're looking for as collateral. All right. What we're going to do is margin the inventory by 30%. We're going to margin the accounts receivable by 75%. And we're going to margin the equipment probably by about 20%. Okay. So now you're getting the inside tips of what we look at as a lender. Debt service coverage, collateral coverage, okay, personal guarantee. Your companies don't have enterprise value. Right? What does enterprise value mean? You're not traded on the Chicago Board of Exchange, the American Stock Exchange, the New York Stock Exchange, right? Because you're a privately held company. So that's what it means when they say you don't have enterprise value. So therefore, you have to personally guarantee that loan. I need to have you on the hook, right? I got to give you a reason to get up in the morning and go to work every day and work that business. See, because if I have your personal guarantee, I'm almost assured that you're going to work that business and make sure that the bank gets repaid. Now, the good thing is, if you really want to this is the time to really make your loan stand out. So you're going to go into M&T Bank and say, Mr. Banker, I have good cash collateral coverage. I have a debt service coverage of 1.5 times. And you know what? I want that SBA Express for $1 million because I know that you get a 75% guarantee. And he's going to say, whoa, you've come in and you've already done your homework. Mr. Borrower, I think we got a deal here. You got a FICO score of 700. You have a PAYDEX score of 80. We got a deal. That's how the bankers look at your deal, okay? So now you have a 7A, or you have a 504, or you have a micro loan. Then you got a grant from Bowie, the city of Bowie. Then you went and got a grant from the state of Maryland. Now you have an EIDL advance or grant. Then you have an EIDL loan up to $150,000. The SBA is going to make the first 6 months of the payments on your new loan. If you got an SBA loan already, we're going to make 3 months of payments on your loan. Oh my gosh. Now between these grants from the city of Bowie, the grant from the state of Maryland, you got an EIDL grant from the SBA, you got a brand new loan that 6 months is going to be paid for you. You got an old SBA loan with 3 months worth of payments are going to be made for you. Man, you got cash flow coming out your ears. Go get the money to sustain and grow your business. It's there for you. A lot of this is funded by our own tax dollars. Let's put our tax dollars to work to sustain and grow your business. In all seriousness, let's do that. You never thought you'd have a government official come on and just beg you to get money. Yes, but the money is there for you. It is there for you.
So I have a question as well. Well, to answer this person's question, yes, the recordings will be published. They'll be published on the Greater Bowie Chamber of Commerce website. Is that correct, Pauline? You want to unmute yourself first?
Yes, they are on the Greater Bowie Chamber of Commerce website, in particular under the BBR tab. Also, you can look on YouTube for the Bowie Business Education Resilience webinars. They're there too on our channel.
Cool. All right, so the question I had, I keep hitting the wrong button, I'm sorry, folks. The question I had, Rod, was I got a call from a client of mine, and the client had I think it was, yeah, definitely an EIDL. And it was just north of 30,000. They got a call from SBA, and I asked them to confirm the call with a communique from SBA that the person from SBA said anything above 30,000, I think it was, for EIDL, you have to have hazard insurance. Is that one of the requirements now?
Yeah, it's general liability. Yeah, yeah. Yep, you sure did.
Yeah, I definitely want to share that with everyone, because that was in the initial EIDL, which was in 2020. They got the call this year to say, hey, you have an EIDL loan, you got to have hazard insurance, which they got. It was a pretty low monthly cost for it, but it was just a note that I wanted to share with you. And I was waiting for you to come on to ask that question, by the way.
You know, actually, if you're in business, you should have general liability or hazard insurance anyway.
Right.
How can you be in business without having a general liability policy, which is, excuse me, it can be, ooh, excuse me, it can either be 2 million in aggregate, 1 million per occurrence, or 3 million aggregate, 1 million per occurrence.
Yep.
There we go. Yeah. So yes. So you should have it. If you don't have it, call me, 240-997-4024. I'll make sure you get it.
Yep.
It's as low as $10 a month in some cases.
So I think that was the last of the, okay, this person just asked, what type of hazard insurance? I have general liability. And
That's it.
Yeah, general, yeah. Yep.
Yeah, that's it. That's it. You get a certificate. That's all you got to send them is the certificate.
Yep.
Or the declaration page from your policy.
Yep.
To show that you have it. But all of you should have it. Okay? There's no reason why any of you should not have it. The other thing you should consider also is errors and omissions. Some people call it professional liability insurance, but you know, people get sued for statements that they make. Whether you're making a representation of your product or service, or you are making a warrant of your product or service, you really should have professional liability. The top two should be professional liability and hazard, or general liability is what it's actually called. At a minimum, you should have those two.
Definitely.
See, Pauline can make a statement that here at the Chamber, we can guarantee that you're going to get that new loan from M&T Bank, right?
Yes, they work very closely with us.
And so, you know, Pauline may have said, well, I think you stand a good chance if you do all of these things. That's actually what Pauline said, okay? But you, the borrower, potential borrower, says, well, Pauline says she says that I could get approved for that loan. All right, so now you the borrower, you go to M&T Bank and you get turned down. So now you go back to Pauline. Pauline, you told me I could get approved. You said, no, I didn't. All right, so now the borrower sues Pauline. So now because she has that professional liability insurance, she's covered, okay? That's why you have professional liability or errors and omissions. Just in case somebody thought that you made a representation or you made a warrant, right? So you got more than you bargained for this evening.
It's been great. Absolutely fantastic.
So we do have one more question.
Okay.
Well, it's more of a statement. I think it's actually pretty good. One person says, I'm with M&T Bank. They said they can give me $100,000 no collateral, but I want the big money.
All right, so here's what I'll say. Yes, they'll give you $100,000 no collateral. Why? Because they're like, you know what? I really don't feel like doing a UCC 1, okay? Only to, let's just say you decide to leave the bank, and you got to go through and they got to release it and all that kind of jazz, right? So it's much easier to just give you $100,000 and tell you to go have fun. That's how you look at it. Now, once you get over $100,000, remember those things that I talked about in terms of collateral, now that comes into play, okay? So just be armed to give accounts receivable or inventory or marketable securities or cash or a second or third deed of trust on your home, okay? Don't forget about your home. Around here, a lot of people have equity in their homes. The average cost of a home, which is, by the way, which I just laugh at, now they see affordable housing is $500,000. When I was growing up, that wasn't affordable housing. Now today, $500,000 is affordable housing. So anyway, the bank will take a second deed of trust on your home also, on your affordable house, okay? So I just want you to keep that in mind once you get over $100,000.
So we have two final comments. Oh, wait, another. So as I said that, someone typed something.
I have a subsidy agreement?
Yeah, it was interesting. I have a subsidy agreement with Department of Human Services. I'm in childcare. That contract is collateral, right?
Well, it depends. And this is what I say, it depends. So there's something called the Federal Assignments of Claims Act. In bank, we just call it the FACA assignment. So you may have had to assign your contract, right, for the bank. HHS, when they pay you, right, because what happens is the bank will do what they call a Federal Assignments of Claims Act. They go into the SAM system, they become the payee of record, okay? So when the government pays you, they know, HHS knows to send the money into a specific checking account. Your line of credit is paid down and any excess funds are then deposited into your checking account. So yeah, technically, your contract is collateral and the associated accounts receivable with that contract, okay? I used to do it all the time. I used to specialize in government contract lending. So typically the contract had to have 6 months or more left on the contract with a minimum of $100,000 or more. But that's a very specialized type of lending. So yes, it's not uncommon for the contract to be used as collateral also.
So just two quick comments. One was very informative, best presentation. Thank you, Mr. Johnson, and they thanked me as well. And another comment was, this has been the best presentation with you, Rod. I hear you all the time.
Oh, good.
That's pretty
Thank
cool.
you.
Yep, that's pretty cool. I don't see any more questions. I don't see any, I have to go scroll through. I don't see any hands up. So with that, Rod, is there any final comments you'd like for us to walk away with and take an action on?
Yeah, quite simply, go get the money. I mean, really, go get the money. and you have so much help, right? If you think it's a daunting task, you have so much assistance out there, free assistance. That's the other thing. I don't want to hear anybody sending me another email telling me they paid $1,000 to get help for forgiveness or for applying for any of these programs. Okay, there's just too much free help to assist you in getting any of these things, any of these programs. Too much free help.
Yep.
So please do not be paying $1,000 or $750 to get somebody to fill out a one-page application for you when you have free assistance.
No, I agree with you 100%. This week we had a call from a client within the SBDC system. They said that they didn't do it, thank goodness. They were about to pay $500 for someone to help them with the DUNS number. DUNS numbers are free. Yeah, it blew me away. Yep, it blew me away. DUNS number, DUNS in Bradstreet, go online, it's free. And
Yes.
they didn't do it, thank goodness. But we helped them through it, and they got through. So yes, this will be available for replay from the very beginning. It'll be on the Greater Bowie Chamber of Commerce website under BBR, correct, Pauline?
Correct.
Yes. So yes, you can always go back. Someone that asked that question had a direct question. Another person says, thank you. This was great. Thank you again. So yeah, I just want to say, Rod, thank you so much. I think we're going to have you, we're definitely going to have you back, I think later in the year, in the summer, in the second series of the 12 webinars. We're definitely going to have you back because we know there's going to be a few updates on the PPP and EIDL program. We know there are going to be some interesting stories that we've heard coming out of SBA on PPP and EIDL. A lot of lessons learned for a lot of the clients that we work with. So Rod, thank you so kindly for taking the time out this evening during your dinner hour. Thank you for doing this. And if anyone wants to reach out to Rod, you have his contact information. You have his email. If not, again, this is recorded. It'll be in the slide deck and all that stuff. So I'm going to turn it over to Pauline. Pauline, thank you for hosting, and back to you.
Oh, thank you. I am going to put up a poll. Here we go. I'm going to launch the polling. And I would like to thank everyone for joining us today. If you could take a moment and answer the exit poll questions. It's been another informative webinar provided by 1917 LLC. Thank you, Rod, so much. And thank you to William. And now more than ever, we do need to have our business plans. And like you said, Rod, file your taxes, be in good standing, know where your paperwork is. We can't say that enough. And this concludes our event.
Well, I do want to talk about next week, who's coming next week, if that's okay.
Absolutely.
Sure. All right, let me just, yep. All right. So as I mentioned, again, this is just a webinars that are built upon each other, and we sort of go through the entire series. So next week, we will have this particular individual, Kessie Stribling. She's talking about managing your mood managing the mood of your team during a pandemic. So she's going to get into some operational management for a lot of business leaders in the group, and talking about the stressors of what we went through and are going through in the company. And she has a really cool way of looking at it and some really good ideas to talk about team building, to talk about how do you address some of your staff issues during the pandemic. And what reminded me, it reminds me of what Rod said just now. Through the PPP, you can actually give incentives as long as your incentives are the same across the board. You can't give yourself the incentive, but if you give someone $250, make sure you give everyone $250, that bonus incentive. So that's one of the key takeaways when I talk about managing your mood and your team. So next week, Kessie will be here, and we just look forward to everyone signing up and joining the next webinar. So Pauline, back to you.
Okay, thank you so much, everyone. Again, have a good evening. We will see you next Thursday at 5 o'clock. If you can't make it, make sure you watch the video.
All right, guys. Have a good evening.
Bye-bye. Good night.
Bye-bye.